Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hello, everyone. Unfortunately, Phil Tarrant isn't with us today, but you're joined by me, your host, Grace Ormsby. You've probably heard me a few times before. Sorry if you are getting a bit sick of my voice. I'm joined today. I'm very, very lucky to be joined by Pete Wargent, who has just told me that he is a long-time listener of the show. And, you know, Pete, I understand that you probably don't listen to every episode. You've got other things going on in your life, but yeah, welcome to the show. How are you today?
Pleasure. Thanks very much. Yeah, it's I've been tuning in for a very long time, so it's nice to get my turn on the show. Really excited. Thank you.
So, Pete, you're obviously a property investor, or we wouldn't have you on here. But what else do you do day to day? What's your day job?
Well, I've owned a buyer's agency since around about 2011. So we started off in London. And then we opened up offices in Sydney and Brisbane. And more recently, I co-founded a national buyers agency, so a company, buyersbuyers.com.au. So we offer affordable buyers agency services, so something a little bit different. So we do that on a national basis. We have a national panel.
You've obviously got a pretty strong background then in property investment. Before we do kind of kick into your own personal property adventure, I suppose, if you started in London, and judging by your accent too, you're from England, what's different in Australia compared to the UK market? You know, I think that's something that a lot of our investors and listeners would be really interested in hearing about.
Yeah, it's very different in many respects. The financing is very different. The rental yields can be different. I think the big thing is really just the way in which people live in Australia is different to the UK. So Australia is a huge country, you know, one of the 6 biggest in the world, and yet we tend to cluster in really particularly 3 places: Sydney and Melbourne, which is where the migrants like myself tend to head to, because those are the places we have heard of, and plus that's where most of the opportunities tend to be from an employment perspective. And then internally, people tend to move to Southeast Queensland. So the demographics in Australia are very different. UK, obviously a much more established capital city in London, but then lots of regional markets as well that are quite a lot cheaper. So yeah, it's a lot of similar principles, but the way in which people live is very different, very coastal in Australia, of course.
Following on from that, is the investment mindset a little bit different?
Yeah, totally. Yeah. So generally in the UK, or particularly in England, you get a lot of professional landlords who might own a very large number of properties, but your typical family or mum and dad, they don't really go in for rentals. It's just not that big a thing in Britain. In Australia, largely because a couple of reasons. One, the government just doesn't own that much of the housing stock in Australia. So there's historically been lots of public housing in Europe and particularly in Britain. But the other reason is, following on from that, the tax system in Australia tends to encourage mum and dad investors. So you get a lot of sort of part-time property investors in Australia with 1 or 2 rentals. So that is really quite different. It's much more part of the national fabric.
Yeah, it would seem like that. And I can understand why. It just seems like in Australia, it's a lot more of a well-established wealth gaining, you know, practice that people can do. Whereas I feel like over in London, and you would see that having worked as a buyer's agent, I guess, a completely different marketplace, and even like the politics that surround it. Is that true?
Yeah, absolutely. And as you would know, if you spent time in London, the housing market in Britain, so there are very few restrictions on foreign capital. So if you live in the centre of London, it's like living in a big hotel. There would be huge numbers of investors and owners from Malaysia or Russia or China. In Australia, there tends to be tighter restrictions on foreign capital, and generally speaking, non-residents can only buy new property to encourage development doesn't apply in Britain. So there's a much more sort of foreign ownership of established property in London in particular.
I guess following on from that, and before we do get into your nitty-gritty property stuff, is it something that Australian investors should consider doing, investing over in the UK?
We used to do quite a lot of stuff with Aussies some years ago. I think these days the number one hurdle is getting finance. If you're a non-resident, you'll find it pretty difficult. It can still be done if you're really definitely keen on doing it, but you'll generally need to put in a larger deposit, and you most likely pay a bit of an interest rate premium for the privilege. The thing is that I always encourage people to think about, it's a bit different for me because I split my time between Australia and Britain. If you're just going to live and retire in Australia, you do need to factor in there's a foreign currency play as well. So, and that's a bit of an unknown factor. So you do have to think about if you're potentially going to repatriate funds in the future, you've got to take into account, well, what happens to the Aussie dollar against the pound? And that's a very difficult thing to predict.
For sure. And I'm guessing, I want to hear now about, your property portfolio, but this is something that you probably grapple with in your own personal experience. Is that correct? Yeah,
we don't tend to worry about it too much because we split our time fairly equally between the two countries. And I suppose the only thing is if the exchange rate really swings in favour of one country, as it did about 20 years ago, the British pound was extremely strong. Through the mining boom, it swung the other way, and the Aussie dollar was strong. So I guess where that is the case, we try to take advantage of it. But it's a bit of a fool's errand trying to predict these things, and arguably most known information is priced into a currency. So
that's true.
You spend a lot of time trying to second guess these things, but usually we tend to take a long-term view of property and not worry too much about the swings and fortunes of the foreign exchange rate.
Fair enough. Well, I want to hear all about this property portfolio, but we're going to take a quick break. We'll be back very soon.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Hey everyone, welcome back to this episode of the Smart Property Investment Show, where I'm joined by Pete Wargent, who is a buyer's agent and splits his time between Australia and the UK. And Pete, when did you first sort of get into property? Like, what sort of was the seed that was planted that made you think that property was a great place to be?
Yeah, it was my wife that got me into property investment originally. My professional background was as a chartered accountant, so I was originally much more interested in the stock market because part of what I did for a living was actually auditing and then later writing annual reports for listed companies. So to me, it felt more naturally that I should be drawn towards analysing companies. My wife, she was a couple of years older than me, and she'd gone into property at a very young age using small amounts of inherited money from her grandmother. And I think it was really just seeing the results that she'd achieved from buying well and killing a big chunk of the mortgage. And it kind of opened my eyes to the potential that leverage can give for you. So it was really partly due to that, really. They got me interested in the idea of property in the first place. Before that, I was mainly only interested in stocks. So that's how it came about.
And I'm guessing if you're an accountant, numbers are pretty good indicator of where you should be going. So then, did you start going in with your wife on properties? Sort of what was your first foray into the market?
Yeah, the first property I actually bought was in my own name. So I first came to Australia back in the late 90s. The first property I bought was actually in Bondi. And then
I'm not surprised at all. Funnily enough.
You'll be shocked to discover, like all Poms and Irish, yes, we spent quite a lot of time in the East. We actually did live in Bondi Junction for many years as well. And I think we spent maybe 6 years living at Darling Harbour. So very traditional Pommy route into the country. We've been up at Noosa now for this is our 7th year in Queensland, so we've changed. But so it was Bondi was my first investment property, and that's done very well over the years. So it's had a few ups and downs on the rental market side of things, but prices have performed very strongly.
So you've still got it then?
Yeah, so this is one of the interesting things with our portfolio is that we've never sold a property. So my wife is absolutely adamant that she was from a farming background, and her dad always told her if you just buy land and never sell it. So she's been absolutely insistent that regardless of my fantasies of selling properties and sort of using the money to travel or buy cars, she's insistent that we've never sold. So I think she bought her first property in the mid-1990s, and over all of that 25-year period, we've still never sold one. So it's one day I'll manage to convince her, but until then, we've just held everything.
It's a pretty strong strategy to hold on to for that long. So following on from that, then I guess you're getting money. The returns are through the rent. Is that correct? Yeah.
So that's one of the interesting things is that if you buy property in Sydney or Melbourne today, the rental yield might be in the range of maybe as low as 2 to 4%. But you do find if you own property for a very long time, so for example, I don't know the exact numbers, but certainly the property my wife bought in Cambridge in England, so she's got a little house there in near the station in Cambridge. I think she bought that house for about maybe £68,000 or something. But these days, the rental return, is throwing off cash, very strong cash flow every month. So it takes a long time to get to that point, though. And even then, you've still got to pay the rates and the property management costs. So it does really take a long time to get you there from residential property. And most of the gains have come from capital growth over that time.
So then what's the go with some of those for that earlier property and the mortgages? Are you still paying those off, or is everything positively geared when you've held it for that long?
Yeah, I think that property, we've probably refinanced it half a dozen times over the years. So I think there's still a little bit of debt on it. But yeah, generally speaking, I would say our LVR across the whole portfolio is only about 30%, because even though we have some loans on interest only and some on principal and interest, but generally you find that over time, the LVR naturally falls lower as prices rise and as you kill some of the debt. So we're not particularly highly leveraged these days. So I don't really know what the end game is, but I guess over time, the LVR generally just naturally falls.
And I love that it sounds a little bit like a set and forget style approach to investing.
Yeah, it is really. And I guess we were both at Deloitte and we went through the system there pretty quickly. So we were both higher rate taxpayers at the age of 26. So we had some pretty decent firepower on the borrowing capacity between us. And I guess we always took the view that we would always try to buy in the best location that we could, even if it meant sacrificing something on the rental yield. Because I guess if you're looking to own a property for 20, 30, 40 years, then eventually the rents will rise in time. And yeah, so that's been our approach. We wanted to try and maximise the use of the borrowing capacity. But most of our early purchases were either in parts of London or in Australia, places like Bondi, Darling Harbour, Inner West. So generally the higher capital growth areas rather than chasing the rents.
Well, I think it's safe to say that a lot of those areas that you've just listed off will be very much, they've been through some huge booms. Those rents would be amazing at the moment. What were some of those later purchases, and what do you kind of look for in a property? You've just said that you don't really, some things you can sacrifice when you're looking in those better areas, but do you want apartments? Are you looking at houses? Like, do you go in and renovate them at all? Like, I don't know.
Yeah, so I think if you've got the budget, I think generally speaking, you want a high land to asset ratio. So if you've got the budget, then a terrace, a Victorian terrace would be wonderful. Our journey has been very often we haven't had the borrowing capacity at various points to buy the perfect property. So we usually just do the best that we can. So, for example, if you're buying in Darling Harbour, you're not going to be buying a house there, obviously. So, but I guess generally speaking, the rule of thumb that we try to follow is look for a sort of a high land to asset ratio, maybe 60% plus, regardless of whether you're buying a house or a unit. More recently, we've bought houses, but a lot of our earlier purchase were units and apartments because that's simply all we could afford in Sydney at that time. It's easy to forget. It's not that long ago that you were paying nearly double-digit mortgage rates in Sydney. So, it was. It's a lot easier to service debt these days, but as recently as 2006-07, it was very expensive to pay down, especially principal and interest mortgages. So, sometimes we just didn't have the budget to buy the perfect property.
Definitely. Well, we're going to take another quick break there, but you did bring up servicing debt. So straight after the break, we'll be talking about that.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back to this episode of the Smart Property Investment Show, where I'm joined by Pete Wargent, who's been investing for many, many years now, owns a number of properties across England and Australia. Pete, you mentioned before the break about, how much easier it is to service debt now. And it's safe to say that interest rates have never been this low, debt. It's so much easier to actually pay off the mortgage now. Has that had a material impact on your approach to buying or refinancing?
So the dynamic has changed a lot. I guess the downside to low interest rates is that generally you'll find rental yields aren't as good these days, and you tend to pay a high price because people have got more firepower now. Obviously, servicing debt, certainly the interest payments is relatively easier, but you may find yourself borrowing more. We've refinanced our portfolio quite regularly, and each time you tend to get a lower mortgage rate. So that's been fantastic. And it's one of the reasons I just simply don't believe a lot of these mortgage stress surveys talking about 40% of households in mortgage stress. Is simply not true. So many people bought their properties years ago when mortgage rates were 8-9%, and now they're 2 or 3. So there's clearly no mortgage stress in that scenario. And I think a lot of this stuff is kind of extrapolated or inferred rather than actual.
With your accountancy background, have you done any kind of maths or calculations to see how your property values have gone up while the debt levels have gone down, while the interest rates on the mortgages have gone down or anything? Is that something that I feel like as an outsider looking in on your property portfolio, that would be a very interesting thing to look at, but does it worry you?
No, not really. I do have an affinity with numbers, obviously, as an accountant, but I think we've always been relatively comfortable in terms of servicing, so that's never really stressed me too much. It's interesting looking back on the journey because we've owned property through the global financial crisis in England, and I think if you went back to February 2009, it's hard to imagine a more miserable time to be a property owner or somebody in the industry in the UK. It was a really awful time with banks going bust and the credit markets froze up. But I guess if you hold on through the cycles, you can still do pretty well. And in fact, in the following decade, London prices doubled again. So yes, you do see, if you're in the market for the long run, you see all the ups and downs. So you need to be well prepared for those downturns and make sure you've got a decent buffer because they do come around generally about once a decade.
And was that 2008 GFC? I mean, you've obviously got the strategy where you don't sell and you hold on, but was there any points where you're like, maybe we should tap out, maybe this isn't the right thing to be doing right now? I think it's kind of interesting because especially in Australia, a lot of investors, there were people that struggled back then, but it wasn't anything like what was experienced over there. No,
and in fact, I was living in Sydney at the time, and we had a very minor slowdown for a while. The Rudd stimulus kicked in, and then China poured in its own stimulus, and Australia the mining boom continued for another 3 or 4 years. So, yeah, I think we were very largely shielded from it. And in fact, Sydney's labour market at the time was very tight, and you could quite often get a pay rise just for turning up for work sometimes. So, yeah, it didn't really feel like a financial crisis in Australia. So being distant from London at that time, didn't really think about it too much. But clearly you see the headlines, the Northern Rock going under and people queuing up outside the banks. It did look pretty hairy for a while.
So it would have just been a batten down the hatches kind of thing. Leave that over there. Worry about what's going on in Australia. Pete, how many investment properties do you actually own now, if you don't mind me asking?
Oh, goodness. So I think 14.
14?
Now. So, yeah, I think if you to add them all up, yeah, so that's roughly equally split between Australia and the UK. So, yeah, we've our most recent purchase was in Leeds in England. So I guess we're a bit heavily skewed towards London and the South East. So we wanted to do something a bit different. So we bought a house up in Leeds there. I think the purchase price was £305,000. So that was actually a recent one. So the UK's got a stamp duty holiday until March next year. So we wanted to try and get in before that. So, yeah, it's been a long and interesting journey for us. I still don't, as I said, I don't really know what the end game is. But we generally these days try to think of investment properties and our investments as being for the kids rather than for us. So, yeah, unless plans change, we'll probably just hold on for the long term, I guess.
Well, Pete, it all sounds like a great strategy. And I think a lot of our listeners would be, pleased to know that you don't have to be transacting properties. And if you're in it for the long haul, it's still going to pay off no matter what you're doing. So I think that's a bit of a refreshing thing for hopefully some of our listeners can agree or feel like they've done the same thing and not this quick, turnover or renovations and things like that. So thank you so much for sharing your journey today. And I feel like, if you buy another property, get back in touch and let us know because we'd love to hear all about it. Yeah,
pleasure. Yeah, there's different ways to do it. We've always felt try and buy as well as you can and let time do the heavy lifting for you. But yeah, certainly adding value through renovation is certainly worth doing if you've got the time and inclination and skills. Yeah, I love that. Let time do the heavy lifting. And I think we'll end on that for today. But to everyone who is at home, thank you so much for listening. And if you enjoyed this show, make sure you leave a review on whatever platform you're using to listen in. And be sure to subscribe to Smart Property Investment if you haven't already. If you do have any questions for the Smart Property Investment team, don't hesitate to reach out. We're available on our social media channels or at editor@smartpropertyinvestment.com.au. But until next time, stay safe and well.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are you in the real estate industry? We're on the lookout for Australia's best agents, networks and property managers to enter the REB Awards 2021 with principal partner ListReady. The awards provide an invaluable opportunity to showcase your contribution to the industry, raise your profile on the national stage and celebrate your achievements with your peers. Nominations close in November. Start your nomination now at realestatebusinessawards.com.au/REB-awards.